All right, let's go over how to find trades for the earnings premium strategy. So just like with the ETF strategy, there's actually a pre-built scan for you to use. What we're going to do is come over to the scanner page and then go to the drop-down menu in the top left corner and select the earnings premium default scan. What this is now showing us is a list of earnings trades that we can actually take for today. And what makes something a trade we can take today is that the tickers on this list have an earnings event either after market close today or before market open tomorrow, meaning that we would be opening a trade today near the close and then exiting the position in the morning after the earnings event has happened, which is basically what earnings trading is all about. So this is a list of the trades that we can take. And according to the theory of the strategy, which basically just states that earnings has a risk premium, we could trade all of these, right? We could take all of these trades and relatively expect to come out and harvest some of the earnings risk premium. But I'd like to add a few more filters on top, primarily just for, liquidity. But there's a couple other things that I use which you might find helpful for your own trading. So we'll go over them quickly here. So taking a look at this list, the first thing that I would want to see is what the average option volume is. Typically, I want to see something with at least, I'd say, 3,000 daily contracts for me to, look into it and see if there's a reasonable trade for me to take. So looking at this here, that basically narrows us down to 1, 2, 3 trades, right? We can do Delta Airlines, Domino's, or Tilray up here at the top. So that's the first filter I apply. The next one would actually be a price filter. And the reason I add a price filter is because, for example, with Tilray, if we're looking at Tilray, it's $1.63 a share. So our straddle price is going to be pretty low for this ticker, meaning that our commissions and slippage are going to make up a pretty significant part of our potential return, making it hard to actually make money. So I just don't trade those ones. I'm typically looking for at least, a $20 stock, maybe 15 on like the absolute low end, depending on your count, to be trading, but definitely not something that's $1. So immediately that excludes Tilray from our trade. At this point, there's basically two things that I look at, and really these are subjective to me. These are things that I've just used over time, but I'll share them with you for your own trading. The first one is the earnings short straddle return, and the next one is actually the implied earnings move itself. So basically between the two, what I like to see is that there's a substantial implied earnings move, usually greater than 3 or 4%, followed by a earnings short straddle return that is positive, meaning that on average over the history of earnings for this company, last 4 years, selling straddles has made money. And typically that's what I want to see. I know it's a small number of events, right? 4 years, 16 events, but still that's something that I typically want to see. And so realistically, both, realistically actually only Delta Airlines is on this list that meets that criteria. So Delta Airlines would be the trade for today's earnings that would meet my criteria and that I would look to place a trade on. So let's go further into Delta Airlines here. You have a dashboard for earnings that's specifically for this strategy. So let's open it up and take a look. You just click the button there. It just takes us over to the earnings dashboard, right? Earnings page right here. Right, we can go to the variance risk premium page, over to the earnings page. And really, I basically just use this top section here. This tells me the story for earnings around Delta Airlines that I want to learn. There's actually more data down at the bottom, but we're not going to focus on that for this video. If you want to learn more about them, there's info buttons you can click. So this top section here for Delta Airlines tells me the story of earnings. I can literally go box by box and it just paints a picture for me. So the earnings is, tomorrow before market open, there's an implied earnings move of 5.47%. So market's basically saying through its option prices, this stock is going to be up or down 5.47% tomorrow. On average though, it's only up or down 3.43%. So right there is the edge that we're sort of trading, right? The difference between the implied and average move is about 2 points here, right? 2%, and that's great. When we look back at the last 4 years of earnings, we can see that the biggest move we've had is about 9%. And this helps me paint a bit of a picture around what's happened in the past? What does the drawdowns look like? Obviously, keeping in mind with earnings, right? Company could come out and declare something crazy and the stock doubles in price or goes to zero almost. Typically I don't price for those types of moves. I'll usually say double the max move is what I sort of price as my realistic worst case scenario. knowing that there's small tails, but like when I say like risking 1 to 2% of my account, let's say on a trade, it's basically doubling this max move is sort of the range that I'm using. Besides that, then I can see, okay, and on average, you're making about 10% of straddle over the last 4 years. Look at that. That's like a pretty beautiful story. You kind of get the whole picture of what's happening around earnings. You can probably just stop there if you really wanted to. But we have these other things here that you can look at that I really like. So I'm actually going to skip over to the short straddle backtest. This is just like with the earnings backtest or the ETF backtest. It's showing you performance historically, right? Individual event performance and cumulative performance. And what I like to see when I look at this backtest, just on a visual level, is I want to see a backtest that actually reflects what short earnings is supposed to look like. Meaning, a lot of small winners, the occasional big loser, right? If the graph is chopping up and down like this, and it's like win, lose, big winners, big losers, I'm less inclined to take a trade because it kind of says to me that the market doesn't really know how to price vol here. And things that should not be surprises are causing big moves, right? Either the market doesn't know what matters for the company, or like this company is just dropping absolutely like crazy information all the time. And both of those are not really things you want to be selling insurance around. So I avoid those and I look for things that actually look like this, right? Where it's a smooth line up and to the right, except for a couple events where there's a big loser, right? We can see here, at the start of this year, the event had it was a 76% loser. Huge drawdown. And that's what we expect, right? We expect that most of the time we make a little bit of money. Once in a while, we take a big hit. And if we wanted to actually look at that event in particular, it's right here on the historical analysis, which basically shows us individual event moves, right? Market implied a 3.82% move, and it moved 9 points, right? It's a huge blowout earnings. What's interesting to see though is that at the in the morning, it had only moved 5%. So for this one, actually, interestingly enough, we may have gotten out with a bit less of a scratch because the backtest uses the implied move and the realized move, but we actually exit a lot closer to the jump a lot of the times because we're closing out in the morning. So this is why I look at this individual trade breakdown here. It allows me to just see even like what direction moves have been, the difference between the like if there's any like post earnings drift, and just an individual event breakdown. So realistically, that's in a nutshell. That's what I do for earnings. I just pull up a list every day of what trades to take, all the ones that are liquid, relatively good price point, and have a positive earnings return. Sell them all. That's really it, right? We don't try to get too fancy with things here. Just keep it simple and try to get this premium. One other last little detail here on the scanner that I'll point out to you now is this earnings look ahead 1 week. So it does exactly what the scanner says. It shows you, instead of 1 day of earnings, it shows you the next 7 days of earnings. The benefit of this being, maybe you want to just look ahead and see what else is coming up, especially to see like how much volume of trades is coming up, right? As we go into earnings season or out of earnings season, the number of trades really changes, and that might, you might take that into account when determining how strict to be with your criteria. Or you may just want to look ahead and get a picture of what's going on. Remember, like a lot of the times here, we're just putting together the story for ourselves about what's happening around an earnings event, and you may actually want to take into account what's happening around the earnings week itself. So with that being said, thank you for tuning into this video. And if you have any questions, just feel free to drop them in the comments of this video or reach out to me through email or Discord. I'm happy to chat. All right, everyone, take care, and we'll talk to you soon.